Well, another day on the market, another company soaring in value because of AI. Dell stock skyrocketed more than 30% Friday, its best day ever. The company reported blockbuster quarterly results. Dell's AI servers are key components in building out AI infrastructure. With today's gains, the PC maker, well, used to just make PCs, added more than $50 billion to its market cap. Dell is the latest in a string of companies, of course, to soar in value because of AI. The market cap of South Korea's Hynix passed $1 trillion this week. Samsung and Micron also recently crossed that threshold. Anthropic, meanwhile, has leapfrogged OpenAI in the race to become the first trillion-dollar AI startup. It raised $65 billion in its latest round of funding. Art Hogan, Chief Market Strategist at B. Riley Wealth Management. He joins me now. Art, that's a lot of trillion-dollar companies built on AI and projections of earnings, I presume. Do they have the earnings, and are you confident they will have the earnings to justify those market valuations?
Yeah, well, there's obviously two ways to look at this, right, Jim? So Dell Computer shocked everybody when, and we used to call them a computer maker. I guess we really have to change that because they sold more servers than they sold computers, and that business is now larger than all of their other businesses put together. So that was a shock, and we find ourselves being surprised almost on a monthly basis by some sector or stock that is doing very well because of the artificial intelligence revolution. And the latest one of those was memory, pure old memory plays, and Micron is one of those plays that has absolutely skyrocketed. The things that I'm enthusiastic about, though, in that run-up and those parabolic moves is Micron's PE, price to earnings ratio, is less than 10, right? So compare that to a AMD, which is a PE ratio of about 50. So it's not as though the revenues and the earnings aren't driving this. The same thing is true of Dell Computer, which went from, before its earnings reported, a PE of 36 down to a PE of 23. So this is a fundamentally driven story. Now, that's not to say that we're getting ahead of ourselves in some of these semiconductor names that have gone parabolic. And if you look at the semiconductor index, it's up 80% year to date. And some of those PEs are getting to be quite nosebleed, whereas software, which is not traded as well over the course of this year to date, have much lower multiples. So there's technology, and then there's the bifurcation of technology, but we certainly found a lot of winners thus far that are away from that original Mag 7 we talked about when ChatGPT rolled out in November of 2022.
Let me ask you this, because Dell has a particular quality about it due to President Trump's public comments about it on May 8th, for instance, saying, quote, go out and buy a Dell, which led to a bump in its stock price. And then we learned later he has stock in the company. You've been in the markets for a long time. A U.S. president touting a stock goes up. President's holdings of that stock increase in value, of course. Is that kosher?
Not even a little bit. And I think public officials probably shouldn't be able to trade stocks publicly, especially when they have the ability to either regulate things around the industries that those companies are in, or actually use the bully pulpit and actually talk about different technologies. Now, the same thing would be true if the government decided to invest a lot of money in quantum computing companies or drone companies, which they have, and if family members of the administration own some of those and profited from that directly. So I think there's a major question of ethics around any public official that has any ability to move an equity or move a sector through their job and holding equities. I think that's a conversation that's long overdue.
No question. Let me ask you this, oddly, from a market perspective. Is that a good short-term bet but a bad long-term one? Because folks don't stay in office forever. Company's going to be around longer, presumably. Well, then President Trump will be in office, or his family members will be the sons of a president who's in office.
Yeah, I would certainly tell you this. I think long term, there are a lot of cutting edge technologies that have getting some government support, which will likely be the next revolution. Quantum computing is probably that, but that's probably 5 or 10 years down the road, and none of these companies are profitable yet. So I think that's both short term and long term, a much more speculative operation. But sort of gambling around what an administration will do has always been very difficult for investors. Very much to think about it this way: if you bet on the first Trump administration that was going to be great for energy companies and drill baby drill, that was a very losing proposition. But if you bet for green tech and solar energy and all sorts of alternative energy sources, that was a very good bet. So it's very counterintuitive sometimes to try to predict what an administration will do for different industries. A topic for a different time, but it's certainly difficult to make a bet around presidential election cycles.
Before we go, when you look at the headline economic figures, GDP growth, pretty anemic, revised down for the first quarter. Job market, pretty flat. Inflation, not going down. I mean, it's going up, right? But by the measures that the Fed watches, and now you even have talk of interest rate increases as opposed to cuts, yet the market continues flying unabated. I mean, are we seeing a bifurcation of those two things, economic indicators and the market itself?
Yeah, I think there's a big difference between how things are going on Wall Street for corporate America. Earnings have been very robust. We just had our sixth quarter in a row of earnings for the S&P 500 that were in double digits. The S&P 500 in the first quarter of this year had earnings growth north of 25%. So things can be good for Wall Street and still be bad for Main Street at the same time. We've got a consumer that's in a difficult position. Jobs are hard to get for recent college grads. Certainly the price of everything has gone up since the start of the war with Iran. And I certainly think that's completely understandable. So two things can be true at the same time. Earnings growth has been spectacular, a lot of that driven by the artificial intelligence CapEx spend. At the same time, prices for everything going up is very difficult for consumers, especially consumers on the lower part of that K-shaped economy.
Art Hogan, always good to have you.
Have a great weekend. Thank you.